Good morning, Steve Freed in Chicago with the morning grain comments. Well, behind me is a corn and soybean field in northern Illinois. Certainly the corn crop has improved over the last couple of days with some showers late last week. Before that, warm temperatures and some dryness had really curled up the corn crop and kind of slowed the growth in the bean crop. Yesterday, the USDA surprisingly lowered U.S. corn and soybean crop ratings more than people had thought. They're now at 67% good to excellent in corn versus 70, 65 in beans versus 68. Saw some declines in Indiana and Ohio, while North Dakota improved. Your lowest crop ratings for corn and beans is Minnesota and Ohio, while in the corn, the highest ratings, Illinois, Iowa, Michigan, Missouri, South Dakota, and Wisconsin. In the beans, Arkansas, Louisiana, Illinois, Iowa, and Wisconsin. I think when we look at the weather forecast for the Midwest, it's kind of a mixture of kind of normal type rains in the 6 to 10 day and maybe normal to slightly above normal temps. I think that's good for the crops. The extended outlook is kind of a mixture of trying to put in a little bit of dryness across parts of Nebraska, southwest Iowa, into Kansas, Missouri, and the Delta. There might be a chance as this ridge moves a little bit further to the west for some pop-up thunderstorms in eastern Illinois, Indiana, and Ohio to try to improve conditions there. So the states that might lose a little bit in this 2 to 3 week forecast could be Nebraska, parts of southwest Iowa, Kansas, Missouri, and the Delta. The USDA said that U.S. soybean plantings are 98% done. The states that still have some beans to plant, Kansas, Kentucky, Missouri, North Carolina, and Tennessee. Most of the people are still keeping their U.S. yields at beans at 51.5 and corn at 177. We saw that 4% of the crop is silking. North Carolina, Tennessee, Texas, and Kentucky. While the winter wheat harvest is 40% done, crop is still rated 30% good to excellent. Spring wheat crop is also rated still 59% good to excellent. We did see most of the commodity markets, including energies, higher because China has relaxed some of its COVID restrictions on the quarantine. That might add a little bit of interest by China to bring more commodities in to restock maybe some lower inventories. We also saw that there is continued talk in the G7 meeting to try to come up with something of a plan to try to reduce inflation. And one thing I don't think the Fed or the governments can do is slow wage inflation. They may not be able to slow energy inflation, especially if China comes in and starts buying. And food inflation is basically up not only to weather, but logistics in moving grain to processors and then have the processors make the food and get it to the supermarkets. Again, inflation is going to be an important part of the market strategy over the next 6 to 8 months. As always, these are my thoughts and not that of ADM or ADM Investor Services.